Good morning. Thanks for your company this Friday, the 4th of December. I'm Jessica Rabir, a market analyst with Bell Direct. Well, the Aussie share market looks like it'll take a bit of a breather today, a fall of 0.1% if you go by the futures, after its gain for the past 3 straight days. Now, the pullback that is on the cards today comes as the US benchmark, the S&P 500, fell slightly from its record high in the final hour of trade, as Pfizer is reportedly to be only shipping half of their planned doses this year because it found that some of its raw materials in its supply chain didn't quite come up to scratch. It's expected to quickly remedy this though, because they've said that they'll roll out, Pfizer and BioNTech will roll out 1.3 billion vaccines in 2021 and will also catch up on the 50 million dose shortfall from this year as production ramps up next. On the economic side of things, we saw weekly employment conditions improve in the US despite COVID-19 cases continuing to rise. Unemployment claims rose less than expected last week, but the real test will be what the monthly job numbers reveal tonight, Sydney time. The S&P 500 ended 0.1% lower, the Dow up 0.3%, the Nasdaq up 0.2%. Commodity screens seeing a lot of action again. The oil price up 0.8%. This is despite OPEC and its allies agreeing to gradually increase production. The iron ore price has hit another new 7-year high. It's at $135 US. If you look at the iron ore fines price, as the Brazilian major Vale has lowered its iron ore production guidance. Now, Fortescue Metals shares surged to a new all-time high yesterday. This was before this extra rally, so keep an eye on that. Copper has continued its rally, but it has eased slightly overnight from its 7-year high. But with both commodities being buoyed by China, that's indeed something to watch. The gold price has continued its ascent as investors continue to unwind their positions in the US safe haven dollar. Now, so gold is up 0.8% to $1,846 US. What to watch today for the iron ore majors so far this week? Keep in mind FMG shares are up 11%, Rio up 10% to an over-decade high, BHP is up about 7% this week to a yearly high. So I'll be watching those. As for copper plays, I'll be watching Morgan Stanley's fave copper stock, Oz Minerals, and Sandfire, which is backed by Morgan Stanley and Credit Suisse as a buy. Smaller copper plays to watch include Red Bank Copper and KGL Resources. AGMs today are being held for AP Eagers and Premier Investments. And on the economic calendar, retail sales out for October tipped to rise 1.6%, so keep an eye on consumer spending stocks. And for trading ideas that could be worth a look, Qantas given a big upgrade by UBS with a new target of $6.20. Yesterday, Qantas shares lost about 1% to $5.49. Now, domestic capacity will increase to about 70% of COVID levels at the end of this year and be at 80% by the end of March next year. Now, the Flying Kangaroo, $3.6 billion in liquidity. Their last update showed that they had more than that, $4.5 billion. So cash is, of course, dropping, but UBS estimates that Qantas will have $2 billion in liquidity by the end of next year. That's even assuming worst-case scenarios that cash flows won't grow. All in all, Qantas looks good to UBS and Bell Potter, given restrictions are easing. And secondly, Macquarie was upgraded by Bell Potter as a buy, increasing its target to 150. That's implying an 8% upside. Now, yesterday, Qantas closed 0.2% higher to $138.60. Now, Macquarie is buying a US-based asset manager and then selling part of the business for a profit. Now, these transactions should see Macquarie's profit lift 3% after FY24. And that's according to Bell Potter. Lastly, keep an eye on Harvest Technology, My Fizz IQ, and Whisper, all showing bullish charting signals according to Trading Central. I'm Jessica Amir with Bell Direct. Stay safe, happy trading, and I'll see you for the weekly wrap.